Good morning, everybody. This is Ryan, and it is time for our training this morning. I'm joining you all from sunny Southern California. Cindy and I are on a 1-month adventure. I don't think I've ever deliberately said, I'm going to take a month and go someplace. It's kind of cool, I got to tell you. I just haven't ever treated myself to do that before. But we had some events happening this summer that all seemed to happen in June. So we said, hey, we'll just head down to Utah, where my oldest grandson graduated from high school, which was awesome. And hang on, let me just double check. I'm going to get my little chat box up here in the corner. Share screen, please. Yes, I will do that. I had my face on there. What was wrong with that? You're saying, we don't want to look at you, Ryan. Share the screen. Okay. You got it. You got it. Let me get that where it's supposed to be, though, right here. All right. So give me, if you will, a confirmation that you can see the screen, not my actual charming, lovely face. Helen says, good morning, glad to hear you are having a wonderful time. Well, I am having a wonderful time. And last night we got in here at Southern California to my daughter's house at 2 o'clock in the morning. I don't know if this has ever happened to any of you guys, but it's happened to me, unfortunately, once before. But because we had multiple trips, I'm trying to balance, I'm trying to get all the flight schedules and how this one ties in with that one. And it wound up being on 2 different airlines. We're going 3 locations. And yesterday morning, we showed up at 9 o'clock for a 10:15 flight. So we showed up at 9:30 for a 11 o'clock flight. Plenty early. That's another story. I usually am there 15 minutes early. My wife likes to be there. She won. Okay. We were very early yesterday. She got her way. We get up to the counter, they're checking our bags, and the guy looks up and he says, man, he said, you're going to hate me for this. I said, what? He said, your flight is at 11 o'clock p.m., not a.m. So what? Can't be right. Well, pilot error. The only way it could have happened is if I somehow, in juggling flights around, didn't see the a.m. p.m. connection and I missed it. Okay. So we had a wonderful extra day in Salt Lake. I called my brother, he came and got me. And so as a result, we got here at 2 o'clock in the morning. But this morning I'm up, I'm looking out, it's clear blue sky. I hear my grandchildren, which is daughters down here, all my granddaughters, they're riding quads, they're driving my golf cart, they're driving little mini motorcycles. They're just having a blast out there. And I guess when I'm done, I'm going to go out and play. So we're down here for 3 weeks or so to finish building the little dome, the little off-grid house that we're building here on my daughter's property, and then get ready for a family reunion. So in about 2 weeks, we'll have a big family reunion. It's going to be a lot of fun. So that's where I'm at. That's what I'm doing. Hope you guys are having a good time. So let's get started here. Trip, good morning, Amy, Charles, everybody, Helen. I'll just grab a couple there and we'll keep going. But today I wanted to talk about something that it's been a favorite subject of mine to. I like skewering sacred cows. Trip knows that. He's been with me a long time. Charles probably knows that. I like pushing the envelope. That's why I did what I did with Japanese candlesticks. And I love finding out that, here am I. I'm not a professional by training. It wasn't my profession to become a stockbroker or just a market professional. Okay. I kind of came into this as a novice, but I found out, to my great surprise, that there are areas that are just so ubiquitous, they're just so generic, that people don't look as deep as they could. In other words, I was able to find things out and be able to train and teach things, ultimately learn and train and teach and figure out stuff that, in my estimation, somebody should have figured this out a long time before I did. All right. I was almost shocked by why am I figuring this out? Why haven't all these other people that have been doing this for 20, 30 years, why didn't they figure that out? It just didn't make sense. So it must not be right. Well, double check it, triple check it, talk about it, test it. It was right. Okay. And so there's value, folks, in being just open to following your interests, following your passions, and just in general, everything that needs to be learned hasn't been learned. And a lot of times things can be learned by people who look at it from a perspective that those that are in the middle of whatever the struggle is, they don't see it because they're too close to it, maybe. I looked at this from the outsider and made some questions. And as I looked for answers, wound up finding answers and finding some information that simply hadn't been figured out before. Why? Because the people that were in it up to their neck couldn't see the perspective. Now, trust me, this is all leading to where we're going today. Information is key, and discovering things is what's exciting in life. I mean, the whole process of growing and learning is the thing that gives us joy. And so there's something I want to share with you that was fascinating to learn, and that is, anybody know, I'll just throw this out. I'm not trying to see if you have the answer. I'm just curious if anybody remembers hearing this before, if you've actually studied this. Does anybody know why we laugh? What prompts people to laugh? That there's a neurological event that's happening in your brain that is attributed to laughing. Now, we're not talking about being tickled, all right? We're talking about some words being said or something being observed, and we start to laugh. Does anybody know? It's fascinating, and I wouldn't expect you to know. I certainly didn't know until somebody taught it to me. I'm not seeing any responses, which is awesome. That means I get to teach you something new. All right. Now, if you're looking at the camera, if you can see my camera, I'm smiling. I'm almost laughing, just telling you about this. And here's what it is. When you learn something new, there's a neurological response that if it is something that is a pleasant surprise or something that's positive, your response is laughing. Whether you do it out loud or whether you just smile and kind of chuckle, it's when you learn something. Your brain loves to make new connections. Now, if you make a new connection by stepping on a sharp tack, that it's not going to elicit laughing. But if it's a positive or if it's a surprise, your brain responds by laughing. Think about it. When somebody tells a joke, they're setting you up. They're setting you up to where you are either anticipating something or you are anticipating that something is coming. In other words, you either think you know what's going to happen or you know something's going to happen. And then whatever happens is a surprise. It's something new. When you tell a joke, the punchline is always something you weren't expecting. If you were expecting it, people don't laugh, right? If it wasn't something that was new, somebody says, hey, I got this joke. A guy goes into a bar and he tells to the guy next to him, what is 2 + 2? And the guy says 4. And he goes, right, good job. Nobody's going to laugh at that. Actually, they might if they were expecting a joke and they didn't get a joke. That might be the surprise. But the fact is, if it's new, it causes a reaction. And laughing comes from jokes because you're set up and then the answer is something you weren't expecting. You were ready to go left and it goes right. You discover something new and you smile. That is so cool. Nobody ever frowns and goes, that is so cool. I hate that. No, if it's so cool, there's a smile. The corners of your mouth go up. It's a smile. These are human reactions. Okay. When we learn something new, there's a reaction that's elicited, whether it is something that's positive in your life that might make you laugh or smile or feel euphoric, or if it's something that makes you cringe or absolutely cower in fear or desperation. New information can be tricky. It can be something that elicits powerful responses. Fear, happiness, laughter, dread, paralyzing fear. I mean, if it's something new, it triggers a response. In the case of if it's new and positive, we laugh. If it's new and just interesting, fascinating information, we'll nod our head, we'll kind of grin and go, wow, that was awesome. That was really cool. And we get a emotional response. The endorphins are released that and the hormones are released that create a strong feeling, either plus or minus. Okay. Helen says, well, and I'm going to try to learn something new and have a pleasant day. Well, then good. Let's do it. Let's learn something new and be pleasant. All right, here we go. Our disclaimer reminds us that nothing that we're going to talk about today is going to be specifically designed to help you make a trading decision. This is education, it's training, it's information. And the information that you get here is not to be interpreted in any way, shape, or form as an endorsement. Trading the market is dangerous. It involves risk and loss and all kinds of things, but it also involves potential for amazing profits and or just really learning some interesting stuff. And that's what we're going to focus on today. All right. We always have a calendar. We always have great events. Thank you, Rob, for the amazing effort that goes into making sure you guys have content that will help you grow and learn and become better as traders and just more interesting human beings, because you have great stuff to talk about. Okay. Rob is got market mornings starting here, weekday mornings at 8:30. Again, phenomenal content. The trading coaches content, which I am trading coaches playbook, which I am thrilled to participate with. It's wonderful. All right. Now, the great freebies. Rob has got a promotion going on here that we should just acknowledge. Just saying that intermixed with all the content is some stuff that's doesn't cost you anything. Not sure how much it cost you to be here today, right? Other than you might be missing something. All right, now there's beautiful sunshine out here. I talked to my guys back home that are finishing up the house that I'm building in Kirkland, Washington, and it's raining like crazy. So, I mean, they're out of the rain. Here I'm in sunshine. Doesn't matter where you are. There's always something positive that's going to be on the calendar. Say, hey, there's some free training. There's some good stuff from Rob. Some things cost money. Some things are for free. It's just a well-rounded, phenomenal package of information. So extra, hear all about it. Guys, we're talking about news today. Now, I thought about this and I thought, extra, read all about it. I think the demographics in this group is pretty safe to say that y'all have heard that means something. I said something to one of my granddaughters this morning, and the idea of extra, hear all about it. She said, what does that mean? And I realized, wow, this generational thing is interesting. In the digital age, things are changing so fast. Information is flying at light speed. And as a result, technology changes. You ask somebody, you show them an old telephone and they don't really know what it is. I was reminded 2 days ago with a grandchild, I wrote something for them and they looked at me and says, I don't read cursive. And it reminded me, I knew that was kind of a thing. I just didn't expect it when I ran into it. Holy cow. My grandkids, several of them, they don't know how to read cursive. Why? Well, because the keyboard has letters on it. It doesn't have cursive on it. It has letters, and you print and you read, and it's kind of almost a lost art. It's really interesting. So anyway, extra, read all about it. I think I'm safe in this demographic that you guys know what that means. A lot of people don't even, they wouldn't almost recognize what a newspaper is, because I know a lot of people that haven't read a newspaper forever. Okay, maybe ever in their whole life, and they're young adults, because everything comes off of a screen, right? But the newsboys used to go out onto the street with fresh news on the newspaper, extra, extra, read all about it. And that's about as fast as you got it. But guys, right now, information flies so fast and there's so much of it that it can become overwhelming. So by definition, this is just an obvious thing, doesn't it? But I thought it was interesting as I pondered it. What is news? It's just new. You take the S off, it's new. It's something new. It's new information. If it wasn't new, no one would care. What is the value of news? Now, guys, this is something that I really want to be profoundly serious with you on. News in and of itself, guys, is nothing. It's new information. Okay, yeah, so, all right, my ring or my hat size is 7.25, 7.25. You all got new information. What's the value? Nothing. Nothing. There's no value to knowing that my hat size is 7.25. There's nothing. Unless there was a contest going on and the winner who guessed my hat size got $1,000. Now that news means something. But in and of itself, it's nothing. It is absolutely nothing. It is the reaction to the news that has value, or that can have value, can have impact. But the news in and of itself is nothing. Guys, I've for decades now, I have watched and studied the impact of news. When I first got started, when Rob and I first got started, there was a lot of news, but it was manageable because it didn't come at you as fast. And there just wasn't as much of it made available. And it feels weird to have it lived to see that change, but it's true. And you used to get news by buying special devices that would, read out like a ticker. And it was not in real time. There were delays. And stocks and movements in the market would happen before any news came out. That still can happen, but it happened more. But once it's out by itself, it means nothing. Then you wait for a reaction. Then that reaction is like ringing the bell and it's game on, the race is on. And the markets will react to that. And sometimes you have a great anticipated news, it is delivered, they ring the bell, game on, and it doesn't move. Doesn't move. Other times it will take off one direction for just a few seconds and then boom, it reverses hard. Other times it'll move sharply in a direction and it will go for hours and then it will stop. Or then it will take off again. Guys, there is nothing that will be a written guideline of how to trade news. Oh, there's plenty out there. I looked at a lot of stuff in preparation for this just to see, what the thoughts were on there. There was absolutely no lack of people with ideas of how to trade news. I didn't list them all here, but it was interesting to go through. And it was trade this piece of news, how you trade this piece of news. And you know what? Every time I read something like that, I look to see if the person, in my opinion, has a clue what they're talking about. Okay. In other words, again, it's like the picture that I've talked with you guys about before, where you have a bunch of people standing around trying to describe an elephant. They're all blind and they're touching different parts of the elephant. And so they're saying, it looks like this, it looks like that, it feels like this, or this is what it is. And you stand back at a distance with your eyes open and you just kind of shake your head. And when people get mired into minutia or detail on trying to figure out how to play a specific news item, what I look for is a generic response. Well, this is how you play earnings, or this is how you play this report that comes out on every Tuesday. And if they've studied it out, maybe they've got something, but most of the time I hear just in the language that they're just guessing. They've got a strategy that they hope works and they're trying to beat the system. Guys, you need to make peace with what you're up against. Not only are you not going to be the first person that hears the news, you yourself are not going to be able to influence that by the way you trade, obviously. Therefore, you're going to want to try to catch and trade with the momentum of those that do have the ability to move that stock, to make it move. Okay, so who are they? What are they going to do when they're going to do it? And the answer is, you don't know. You don't know. You don't know who they are. You probably don't know how to read signals. There's probably nothing that will help you know exactly what they're going to do and when it's going to do. Guys, trading news is always a crapshoot, right? It's cross your fingers and hope, or you're chasing momentum. You do not have the wherewithal to be in the know. Okay, so we need to accept that. Okay, you're not going to be the one influencing it. You've got to figure out how to go with whatever happens and when you should do it, and quite frankly, if you should do it. So the things I wanted to talk about today have to do with getting you in the frame of mind of a strategy of how to use news and trade news. I'm not going to take a particular report like a farm report or a consumer price index report and tell you this is how to trade it, because I don't believe that there is a specific set of rules of this is how you trade anything. You can have trading rules for how you trade that can be very smart. But you'll see my theme develop here as we go. Look, stocks, bonds, commodities, futures, markets, all of the things that are out there to be traded, they have a perceived value. Now, this is where I want you to pay attention to this list, and maybe you want to copy this down when you're done, but they have a perceived value that influences trading pressure. Okay, so I want to make sure you understand these terms. And I know some of you have been around forever, but this is a good advice, a good reminder of the mechanics of how this works. What is trading pressure? Well, trading pressure, guys, is buying and selling. Okay, now walk with me through here. If somebody says, I want 10 shares at $4, and someone says, I'll sell you 10 shares at $4. Okay, we have an interaction between a buyer and a seller. The buying pressure and the selling pressure are equal. Okay, they're equal. If somebody says, I want 20, and someone says, okay, I'll give you 20 at that price. Did the price change? No. But there is a dynamic going on. The bid and the ask are two different prices. You all know that. If someone says, how much can I buy that stock for? Someone says, I'll sell it to you for 20 bucks. Okay. And someone says, I would like to sell some of this. And someone will say, well, I'll give you $19.50. See, if you want to sell it, you're going to sell it a little lower than what the ask price is or the bid price is to buy it, or excuse me, to sell it. So you've got two different prices. They're usually not very far apart. I know this is rudimentary, but go with me on this. And every time somebody says, I want 10 at the bid, at the asking price, and someone says, I will sell you that, then you have a market. And if long as it trades at the same bid and the same ask, the same bid, the same ask, then you have trade, but you don't have movement. It's different prices. It's two different prices, but the price isn't moving because the selling price is always the same. The buying price is always the same. That would indicate that the buying pressure and the selling pressure are at an equilibrium. This is really important. Why will a stock sit there and trade and not move very much? Because the bid and the ask prices that are being laid out there are satisfactory to the people trading. They're happy with it. I'll buy it for that price. I'll sell it for that price. Stocks like a General Electric, something that is a institutionally traded stock, for example, there's very little price movement. People are happy with the price of the stock. There's not anything that drives or moves that very much. If a stock pays dividends, people don't care too much about what the stock is doing as long as it's paying out the dividend. They're owning it as long as it pays the dividend. If it doesn't move much, they're not worried about it. Active traders like to see movement. They want to buy it at one price and sell it at a higher price. Sell it at a higher price, buy at a lower price. They want movement. And so the different motives in the market will determine fluctuation once there is an interruption in the buying and the selling pressure. I want 10, you'll sell me 10. Ask and bid prices are fulfilled, nothing changes. The ask price didn't change after the transaction. The bid price didn't change after the transaction. That's equilibrium. Guys, again, there's a certain amount of the market that likes equilibrium. They like things to be stable. There's other parts of the market, people in the market that want movement. They want it unstable. Guys, when a stock is moving up and up and up, it's not stable. When it's moving down, 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 it's not stable. Now, keep in mind, there's a large segment of the market that wants stability. There's a large segment of the market that wants trading. That creates competition. It creates push and shove and take. And that creates changes in pressure. If someone says, I want 10 at this price, and someone says, I'll give you 5, but I want 10. Anybody else? Nope, not at that price. I'll give you 5 at that price. Well, okay, I'll take the 5, but I need another 5. And all the other sellers are going, yeah, we'll sell it to you, but not at that price. We want a higher price. Okay. If a buyer looks desperate, the selling price tends to exhaust the inventory, and then you raise up to the next person who's willing to sell, but they're going to be at a higher price. And if the person who's desperate really wants it, they'll pay the higher price. Now you've just changed the bid and the ask. And once they start to separate, the bid and the ask have a comfortable distance between each other. And if the desperate buyer is willing to pay up to the next price just to get inventory, now you've widened the spread between the bid and the ask, and that will not last. Either the selling price will come back down, or the new buying price gets accepted, and anybody who else wants it says, okay, I'll take it at that price. And now you're starting to move because you have pressure. You have buying pressure. The buying pressure is overrunning the inventory, and the buyers are willing to bid up, to buy up to that next selling price just in order to get something, and it starts to move. Now, why is it moving? That's the new part of it. The new, there's something new. Why is that happening? Why is that buyer willing to say, okay, I'll step up and pay more than everybody was paying on the last few trades, or the last week, or the last day? I'll pay more. Why? Because I want more. Why? If you have to pay more than it was before. Well, I'm not going to tell you why. But you see, there is a why. That's the point. There is a why. And if you knew what the why was, it might give you a reason to say, hey, I think I want to trade on that too. Why? It's the why. I'm not sure. Everybody else is doing it. Is that a good enough reason? Probably not. But if you got 2 or 3 friends that are doing it, and they're looking at you and they're grinning and they're going, I can't tell you, but man, I am loading up on this sucker. Well, then you might be motivated to jump in on it because you've got a perception that there's a change in value that is worth it. Something is changing. It's moving to the upside. I want a piece of this action. Even if you don't know what it is, you could be following a couple of friends who winked at you and said, you got to get in on this, dude. Okay. That price movement, any movement in the price is a change of value, and it's based on a perception. Why would a buyer be willing to pay more and more and more? Because they think that something's going on. Are they right? I don't know. Maybe. What if they have inside information? I don't know. It could be. What if it's starting to move and they think, I'm not going to miss out on this thing, so I'm jumping in on it too? Why? I don't know why. It's just moving. Or I heard a rumor and it's moving. Or here's another one. You've got a client that has said, I want 2,000 shares, but I want them at this price, a specific price. Okay. Now the broker's got to take that to fill that order, and they've got to try, or it could be even a machine. It's trying to fill at a specific price. So if it gets within a certain range, it'll jump in and start buying. That buying may upset the balance. If it does, the price will start moving away from it. So the algorithm or the person will stop. Now, if they were part of the drive that was pushing the price up because they put extra demand on it, okay. And if stopping causes the price to start retracing back down because there's no imbalance anymore, there's nobody willing to buy up at higher prices, so it starts to come back down to where it was, then that algorithm will kick in and it'll start buying more, and it'll keep buying until the price moves away from it. Then it will stop and it'll wait, because it won't trade unless it gets down within a certain range. But in and of itself, buying in that range could influence or upset the balance. So guys, what does this have to do with news? It has everything to do with news, because there is no motivation to change the price, because everybody, if you want to buy it, would like to buy it at where it's at. You don't want to say, I want to buy some of that, but I'm going to wait till it goes up. I want to sell some of this, but I'm going to wait till it goes down. That's not what's going on, guys, right? So a change in perception will cause someone to, if the inventory dumps out, to continue to buy or sell, even though the price that they were looking for just emptied out. They'll move to the next price and say, I'll take it. That spreads the spread. It widens the spread. And guys, you don't see spreads go wide and stay wide. It's a dynamic that it's fluid, it's temporary, it's like a bungee cord. There are certain circumstances where spreads will stay wide, but that's not normal. I'm talking about normal trading activity. Spreads are tight. They're very well managed. It's in your favor, by the way, as a trader, for those spreads to be tight. And so if they spread, if someone suddenly steps up to a higher bid and ask, or a lower bid and ask, they are influencing that spread. And it's like a bungee cord. It starts to stretch, and then depending on the pressure, one will move to come back to the other one. The selling price will come down towards the buy. The buying pressure will go up to stay at the same proximity distance between the selling pressure. That's the spread, and it's a powerful influence. Imbalances then will determine a direction. So stocks start to move when there's an imbalance in the trading, or in the buying pressure or the selling pressure. How much buying and selling pressure determines on how far that stock will move, either to the upside or to the downside. When you're dealing with Forex and trading E-minis, you're trading something dynamic, you'll see this stuff moving, setting patterns, doing all these things that we look at in the market, and it's doing it at very, very fast speeds. You look back on something like General Motors, it's doing the same darn thing, but it's doing it in slow motion. But it's all based on the same thing. New information causes a hormonal response that's either positive or negative, but it changes perceptions. And it either creates a positive feeling or a negative feeling in the traders and or the programmed AI, the artificial intelligence in the algorithms. They're set up to artificially have hormonal responses. If things start to move a certain way, they're programmed to act in a certain way. And as soon as they stop, they stop. Okay, it's just pure artificial intelligence. It's so much more advanced than when I got started in this market, but it behaves the same way. Why? Because you have human beings programming it. Okay, eventually the imbalance reaches an equilibrium. You get back to price stability. The willingness to buy up comes to an end. And people are no longer willing to buy up. They'll trade at this price, but they won't buy up anymore. And in fact, if it reaches a point where there's no buy up pressure, and there's really nobody even willing to buy it at that particular price, the buying pressure dries up. And what happens? The price has to move to try to find buyers. It may have to move to find sellers, but the price will move until there is an equilibrium, till there's trading, constant normal trading, some sort of volume that determines normal. If you drop below normal, If you lose buying pressure or increased buying pressure or selling pressure is increased or decreased, all of those things will create a widening of the spread, and then the stronger force will hold and the weaker force moves to close the spread, and there's your price movement. And if that buying pressure or selling pressure continues, the price continues to move, but it comes to a stop. And this happens on a daily chart, it happens on a weekly chart, it happens on a monthly chart, it happens on a 2-minute chart, a 1-minute chart. This is human nature being played out, and it all has to do with new information. Most of the time, folks, what you see is not new information that is going to move the stock dramatically right now. A lot of the times, it's already done. By the time the news comes out, the move is already done. Why? Because it's only new to the people hearing it for the first time. It doesn't mean it's brand new. Okay, if you've got an event that's being announced at 10 o'clock and the price of the stock starts to move prior to that, you have two things. Either people are guessing that they know what it's going to be, or people actually do know what it's going to be. Both are real scenarios. But if there is no price fluctuation, if there's no reason, there's not going to be any trading. Right? If there was no price movement, there would be no trading. It's a standoff. Now, it doesn't mean that people might not buy and sell, but they're not trading, they're investing. People who buy General Motors are typically not buying it trying to catch a big run. They're buying it because they've decided, I think I want a little bit more of this in my portfolio. So go ahead and buy me the 1,000 shares that I want, but do it slowly so that we don't create an imbalance and cause the price to run away from us. Just try to just slowly move it in, run with the flow of the river, and it doesn't upset anything because it's a slow moving river. But if there's a lot of price fluctuation, if you're in a class 5 rapids, a lot of people enjoy that. And that's trading, man. That's in there, rock and roll, up and down and left and right, under the water, over the water, bouncing off the rocks. I mean, they enjoy that. Okay. But in the end, if there's no price fluctuation, there's no trading. But again, keep in mind, there's a difference between trading and investing. If you're dividend trading, you really don't care what the stock is doing. You want the dividend that's going to pay out quarterly or annually. You want the dividends. What you're doing for it. A lot of traders consider that boring. That's not trading. That's just investing. That's just sitting there waiting for your check to come in. Yeah, it is. And for some people, that's all they're trying to do. So, okay, it's not trading. So what? The market is not all trading. A lot of the market is investing. And arguably, I would say that's not trading. I would draw a distinction. Investing in the market is not trading. It's two different things. But the market is dynamic, it's moving. Either slow or fast, it's moving. And if it's slow, you're more on the investment side of things. If it's fast, you're jumping in and wanting to trade. That's just the way it works out. And the trading is going to be influenced by the news. And so is the boring standoff. News on General Motors is not, it's not fluid as much as it would be on Netflix or Amazon. There's not that much exciting, powerful news coming out except the quarterly earnings report. And that's not even exciting because it usually doesn't change very much. If it does, then it causes a little bit of excitement, but usually it doesn't. So it's a boring deal. It's a dividend in trade, or it's just a long-term holding. But when things are rocking and rolling, you better be paying attention to news, sort of. And I say that sort of because of where we're going to go here. Guys, like I say, for some companies, some of the big dogs, they prefer stability. Dell and Microsoft, they use rock and roll, high volatility, high movement to drive their stocks early on to splits. Drive them up, split it, drop it down, drive it up, split it. That caused so much excitement and trading, excited trading, because it was moving. It was moving up, then it would drop and start and move back up and then split and then move back up, rinse and repeat. But you know what the goal was? The stated goal by Michael Dell and even Bill Gates was that they were trying to get their companies big enough so they would stabilize. Okay. They want them to stabilize. They wanted them to get boring. Why? Because it's easier to control the company when the value isn't going up by billions every day or dropping by billions every day. But the goal was to reach a large valuation and then coast, kick it into neutral, and then just coast on out. So there's divergent motives in the market between the people that are driving the large economic portion of the market. In other words, they've got the big companies or the big interests or the big indexes. Okay. But there's great value in growth and there's great value in stability. And that right there, folks, causes the angst and some of the discord in the market that allows it to move, that makes it exciting on some days to trade and other times it's boring. It just depends on the circumstance. It depends on the motives and how big the dogs are. If the dogs and the big dogs and the traders of the big dogs want something to happen, there's ways to make that happen. News can be very manipulated, guys. So here's my best advice on trading news. And if you were anticipating I was going to go through the farm index, right, or the CPI, I'm not, because what I'm going to teach you applies to all of them. I'm a big fan of patterns. You know that. Why? Because I don't care what caused the move. If it goes from a support level of 250 up to a resistance level of 285, that's 35 points. If it's made that move before and it bounces off 250 and goes up to 285, is there news? Yeah, I'm sure there is. Do I care? I absolutely don't care. I couldn't care less. I don't care what the news is. I see that there's a behavior. If it goes to 250 like it's done before and it turns and heads up and it's gone up to 285-ish twice before, there's a real good reason that these traders are going to move it up to 285-ish again. Why? Because whatever that was in that pattern, a lot of people made a lot of money. And if they can do it 3 times, if they've done it twice, that's awesome. But they can do it 3 times. Now this is really some powerful manipulation. I'm willing to trade that. What's the news? I don't know. Well, why is it moving? I don't know. I don't care. I'm trading a freaking pattern. So what if news comes out? Okay, great. Let's see what happens. What was the news? Let's see what happens. Guys, I tend to prefer pattern to news. However, pattern can be, or news can be pattern. Let me give you an example. If a certain report comes out every month and a report that happens 2 days before that is positive, then this report tends to be negative. If I look last month and when the report came out positive, the precursor, and this one went negative, interesting, that's 2. I look back a third month before that, 3 months ago, positive, negative. Wow. Then I look back 4 months and I see the precursor went the opposite direction and the one that I'm looking at didn't move. And so I'm interested. I'm going back over 12 months and I'm going to find out. And here's what I find out. Let's say this is what we find out. Every time the precursor has a positive report, this one goes negative. If the precursor has a negative report, this one is neutral. Guys, I'm playing news. I don't know what the news is, but I've got a pattern that says if this one does this, this one tends to do this. If this one does that, this one tends to do this. Well, now I can play the news, but am I really playing news? No, I'm playing the reaction to the news, which is a pattern. Guys, most of the time, by the time the news is released to the public, the move has already taken place. It's built in. You've heard that the move was built into the news. Everybody thought it was going to be positive. It was. The stock didn't go up. Why? Because it ran up in anticipation of that. When it got there, it was just, yeah, okay, that's what we thought. Well, let's run the price up. No, because now it's just a confirmation of what we already knew. The price already run up. In fact, haven't you seen when a stock will have good news come out and it goes down? Why? Well, oftentimes it's because they've already ran it up. They anticipate it. As soon as it was confirmed, it's not news anymore. and it doesn't have any great value, so the stock goes back to where it was. It ran up in anticipation of. So how do you play that? Well, you don't just jump in and assume that it's built in, it's going to go down, because it may not. Maybe the news surprises, and instead of going down like it's done 3 months before, it goes somewhere else. Okay, fine. That's why you have bracketing. That's why you have your stops. That's why you have your ifs, them statements. If this happens, this is what I'm going to do. If that happens, this is what I'm going to do. So pay attention. Let me summarize this for you right now. This is really important. Guys, it doesn't matter what you think you know. You are not going to be the one that reacts to the news that's going to move the stock. You're not big enough. What you've got to get good at is following what happens and not getting whipsawed and stepped on because you walked out in the middle of the freeway of 65-mile-an-hour moving vehicles at 4,000 or 5,000 pounds each, and you got creamed. You're not going to be on that freeway going 70 miles an hour. You've got to figure out how to move with that, with the momentum, and do it safely. And I'll give you some ideas here in just a minute. But guys, the news is in and of itself can be a pattern if you can look back and see it. Guys, if there's no pattern, don't force it. But if there's a pattern, find it. If you're interested in playing a particular kind of news, look backwards. Past is prologue. Look backwards and see how this news plays, and then look for the usual suspects. You look for things related. When you're looking at a farm report or you're looking at the CPI, you may have some related news that comes out ahead of it. Or you may find that there's collateral news. In other words, there's collateral reaction to when this thing you're looking at, when that piece of news comes out, you have a reaction that becomes a pattern reaction of something else 2 days later. Now you've got something to look at. Now you say, wow, okay, I'm watching this index, this came out and it did this. And now you're playing the second one off of the one that you're watching, rather than the first scenario was watching something else to give you an idea of what the one you want to trade is going to do. If you can find the pattern, you can trade it. And as long as you have your stops, if for some reason it doesn't work this time, no harm, no foul. You pay a little price to find out and you're good. You don't lose anything. You put up a price that you're willing to pay to find out if this pattern is going to repeat. But guys, there is no magic formula for trading news. I've seen so many people with so many ideas. Well, this happens, I can tell. I know that the earnings are going to come out and they're going to be really good. Guys, there's always people. Look, the analysts that follow the stock have their own predictions. They've already predicted it's going to go up so many cents a share. All right. It's going to, the earnings are going to be so many cents a share. I didn't mean go up. The earnings are going to be at so many cents a share higher than we thought, than what it was last quarter. That would be a good scenario. So they've set a benchmark, and these analysts are supposed to be good. So people start setting up and either trading or getting ready to trade based on that anticipation. The stock comes out with their earnings and they report less. That's going to cause a reaction. If they report more, it's going to cause a reaction. If they report exactly what they predicted, it's going to cause a reaction. And my question to you is, what's the reaction? And your answer better be, I don't know. But they beat earnings. Did they go up? I don't know. Should they go up? I don't know. I honestly don't know. Let me look at and see if there's a pattern. What happens in the past when they beat earnings? What happens in the past when they come up to earnings and they beat earnings, but they've already been running up for the previous 3 weeks? What happens if we look at the other 2 or 3 quarters where they come out, they beat earnings, but they have been going down for the previous 2 weeks? Guys, you see, all of this plays into things that you can't control. You don't know, you won't know. Even if you find out after the fact, it may or may not be accurate. In the end, news needs to be traded like a pattern. Patterns are tradable, guys. Patterns are tradable with reasonable, limited risk, because you've got a entry point and you've got a target and you've got an exit point if it turns out that the trade is not going to go the way it looked like it's going to go. Not the way you thought it was going to go, the way it looked like it was going to go. It's not personal. You didn't guess right or guess wrong. You said, I'll trade if it does this, I'll trade with this expectation. If it reverses on me, I'll get out there. That's what it'll cost to find out if this pattern's going to work again. Guys, it is critical that you look at news as nothing more than information that may or may not move the stock. It may move it up. It may move it down. It may move it a little bit. It may move it a lot. It may move it up and then down. It may do all kinds of things. You don't know how it's going to react. Your best way of trading something that you don't know is to look backwards and see if you can find a pattern. Remember, the news by itself is nothing. I've been in this long enough to see wonderful, powerful news. The stock beats expectations, and it goes down. Nobody knows why. Often, a few days later, something will come out and you go, oh, you see, we didn't know that. It makes sense. It explains it. Oftentimes, you never get an explanation, but I guarantee you, when there's price movement, there is a reason. There is news. But to expect that you're going to hear that news on CNBC or Fox or MSNBC, that you're going to hear that on the special website that you follow, the chances that you're going to hear that and it'll explain exactly what happened are very small. The chance that the 24/7 news cycle that is forced to come up with content every hour of every day on CNBC, MSNBC, exactly, Fox Business, they have to fill airtime. They have to talk about something. They can't sit there and, you can't have the camera on these guys with their, their head on their chin, or excuse me, their chin on their arm, like I'm doing right now, just bored, tapping on the table, sipping on their coffee, waiting for some news to come across. That doesn't work. So they will talk about something. They'll talk about anything to fill the time. If there's any movement in the price of a stock, and if there's any news, they automatically will attribute the price movement to that news. They don't have a choice. But how many times, my gosh, have I seen that it turns out the news was totally irrelevant, and the next day something shows that was a stupid thing to do yesterday? That connection they made was absolutely fabricated. They were just guessing because they were filling news. They were filling airtime. But tomorrow, when you get the real story, then all they talk about is that, with the idea that you will forget and you won't remember what happened yesterday because you're so focused on what's happening now. And I've seen it. I've watched it so many times where you'll see guys talking about, and after a while, you kind of know what you're looking for, and you'll hear them talking about something. You go, you guys are idiots. You don't know that that's the case. It's just that's the only thing you can associate it with, so you're giving it credit. What happens when the truth comes out tomorrow? Well, you just report that as some new thing. And you won't go, we told you yesterday it was this thing. Wow, that was so stupid. We didn't have a clue, but I mean, we had to fill the airtime. It's the only thing we had. But now we got some good information. That doesn't sell prescriptions, right? That doesn't keep people tuned in. But what they count on is with just a fast flurry. They're constantly all the time, boy, you better, and you're just reacting and following in rapt attention at whatever they're talking about. And you're going, how can I keep track of all this good news? Half of it's not good news, guys, or at least a good chunk of it. It's garbage, right? So how do you trade it? Don't lean into or onto. I think it's supposed to be into a punch. That simply means, guys, you don't know. You don't know what the news, if it comes out positive, what's it going to do? Is it going to go up? You don't know. It might. The question is what? Look backwards. Look backwards. If it comes out and they announce the stock or the earnings are 4 cents higher than they were expected, what does that mean? You don't know. Look backwards to last quarter and the one before that and one before that. Guys, if you want to play something as dangerous as news, and I'm saying that seriously, if you want to play something as dangerous as news, you better be paying attention. And you better look back over at least the last year. That's only 4 quarters. I'd look, when it comes to, if you're only looking at quarterly, I'd look at 2 or 3 years. And I'd write down some scenarios. If it beats by so much and it was moving down, this is what it did. If it beats by so much and it was moving up, this is what it did. You're going to have to do it. Nobody's going to do it for you. But I tell you, just like I tell any other situation in charting, guys, if there's a pattern, play it. If there's not, don't force it. If you want to play it, then make sure that you understand that you go into eyes wide open. This is a pure guess. I don't have a clue. I don't have a clue how it's going to react to this news. It probably, if it's positive, it should go up, but it may not, you know. And so if you want to take a flyer and throw some money out there saying, look, I don't have a clue. If it works, great. If it doesn't, it's worth, this is what I'm willing to pay for entertainment. You know, I'm playing the lotto. That's all it is. I'm going to play the lotto. When you're playing news, let's buy a lotto ticket. Is it going to pan out? You know, most of the time they don't, but it might. Okay, well, let's do it. That would be a justification I would be fine with. As long as it's lotto money, play it. Gosh, guys, throw it up in the wind on the wall, see if it sticks. I don't care. And if it does, it'll be awesome. If it doesn't, you know, it was entertainment. But don't lean into the punch. Don't think you know something. Now, if you can look backwards and you can find a pattern, I am so proud of you, because now you are putting the odds in your favor. Now it's not a guess. Now it's not lotto. This is business. Guys, when somebody opens a business, they weigh all of the parameters. They look at the potential outcome. They look at the cost to get started up and get machined up production, and how long it will take to get to break even. So they've got to be right long enough for it to get to a certain point just to break even. And then if they can keep it going, then they'll make some money. On the surface, you might say, wow, that's a lot of risk. Yeah, it is. But they do a risk analysis and they say, we're willing to take that risk because of what we see as a potential reward. Okay, that's business. I have no problem with that. At least it's thought out with exit strategies, costs that you're okay with, a reasonable profit that's worth going after. That's good. That's good thinking. That's good business. But guys, don't lean into the punch because somebody made a comment on CNBC or somebody on Fox Business News, and you go, ooh, I think they're right. Guys, well, you just committed the pardonable thing. It's not about what you think. You're going to play what it does, not what you think it's going to do. And it's not about being right, because your guess, your hunch, the tip, it doesn't mean anything. It's about doing the right thing, not being right, doing right. So guys, my explanation on news is that news is just new, something that's new. Most of the time, I don't think we actually see the real reason that price moves, because we don't know the motivation. We don't know how valuable it was to the people who were big enough to move the stock. All you want to be able to do is follow along and pick up some money and not get crushed in the freeway. You're going to have to go out there, but you better do it careful so you don't get run over. The unexplained, and that's what is the biggest reason that drives markets, is what you don't know. There is an explanation for sure. I guarantee you there's an explanation. You just haven't heard it yet. And the truth is, you may not ever hear it. Because what we see and hear and read on the TV, on the internet, is oftentimes just filler. CNBC filler. So pull up a list. There's no shortage of news that happens every month. We have quarterly news that comes out quarterly. We have annual news that comes out there. If you want to play news, guys, if you want to play news, do it smart. Do it the way you trade patterns. That's the probability. That's the strongest thing I can offer you. Past is prologue. The most powerful driver of price movement is recent price movement, recent activity. It's what's freshest on people's minds. How did it behave last quarter? You set up the same scenario, you're likely to get the same response. Well, that's a lot of ifs. Yeah, you're right. But if I look back over the last year and a half, I see that it happened 4 times, and every time well, let's go back. In 2 years, so there's 8 earning cycles. In 8 of those earning cycles, 3 times it did a certain behavior and it had the exact same response. Well, then I would set up a trade that if it starts to look like that, I will trade in that direction, because 3 times in a row, or 3 out of 3 stretched out over 2 years, that's a pattern I can play. Guys, there's my story. I'm sticking to it. The most powerful thing I can teach you about news is that if you turn it into a pattern, you can trade it. If you can't find the pattern, it's lotto money. It's pure gamble. I have no problem if you want to gamble. I really don't. If you want to take a flyer and just throw something out there that you know you don't have any control over, or you got a hunch, great. But you've got to treat it mentally as, I'm throwing this money away. If it comes back to me, awesome. If it doesn't, it was worth just seeing because it was a fun ride. You know, I just wanted to find out, okay, so it's got to be throwaway money. It's lotto money. If you want to trade it, that's different. If you want to trade it, treat it like a pattern, a chart pattern. Go back over time, find the behavior that you're looking for, find correlated behavior, find causal behavior. When this thing moves first and does this, the one I'm looking at does that, right? Or it can be that you're going to trade the first one or the second one, and I like trading the second one. If there's a pattern, it's a reactionary pattern, so you got a chance. You see the first one react, and you've got this typically behaving that way. If it's done it several times, that's trading. That's calculated risk. That is good business. That's normal cost-benefit analysis. There's nothing wrong with it. I love it. Okay, but just recognize the difference, and you won't get hurt, guys. It can be exciting, but it can be devastating, both financially and emotionally. When you hang your opinion out there and it just kicks you in the teeth, it wrecks you. It wrecks your confidence. But if it kicks you in the teeth, but you had a mouth guard on and you knew that you could get kicked in the teeth, and you knew that all it would do is you're going to have to buy a new mouth guard, but I'm not going to break any teeth, then great. That's trading. That's smart. That's business. But if you go in there, eyes wide open, puppy dog, Pollyanna, ooh, I think I got this. My friend told me, yada, yada, yada. Or they said yesterday on CNBC, if it comes out and it's over 4 cents, the stock is going to rocket. Oh, so I'm all in. Oh my gosh, guys, please, please. As Rob, I think, used to say, some of the guys, and Rob, I'm sure, said it as well. That's not trading. If you're going to Las Vegas with that kind of an attitude, you know, go to a show, go to some place where at least they give you drinks and dinner and take your money, you know. There you go. Karen says, I enjoyed the lesson today. Enjoy the family. Thank you very much. Tripp says the reaction to the Fed announcement retraces a lot. Okay. It used to do it even more. Tripp, you just touched on one thing that I didn't say. I wish I would have remembered to say this. Guys, the other thing about patterns is really, really powerful. You know that patterns go 3 to 5 times and they break. There is a real phenomenon that things that used to work, that you get used to, will sometimes quit working. And Tripp just brought up an excellent point. The reaction to the Fed report has been more strong in the past. It's getting less. Well, there's several reasons why that is the case. And it's not that it can't happen again or go back to that. It certainly can. But the point is that you have to be careful and watch. If a pattern starts to break down, guys, then you tend to back away from the pattern. Hey, it used to work. It doesn't work anymore. Okay, well, quit trading it or trade smaller until the pattern comes back. Patterns come and go. Tripp, thanks for bringing that up. It's really powerful. Patterns can develop and go for a while and then change. That's why you look back, and guys, that's why you just can't trust news in and of itself. It doesn't mean anything. It's the reaction. What's that going to be? It's not going to be you and me. It's going to be somebody else. Well, what's the reaction going to be? I don't know, but I see a pattern. With a pattern, I can set parameters for probabilities, for proper risk-benefit analysis. Then you can trade. My gosh, that's what trading is. You're as long as you can bring it back to trading, which is cost-benefit analysis, risk management, you're fine, right? Karen says, thanks for a great lesson. I will. My friend came from Vegas with $1 million, but when he got to Vegas, he had 2 million. He came away with $1 million, but he started with 2. I love that. That's a good one. Helen, thanks for another great session. Have a wonderful, warm, sunny month. I will. Thank you so much, guys. God bless. God bless this country. Oh my gosh. Just please pray for things and heads to get some sanity back. There's some crazy stuff going on in this country, guys. God help us, right? Charles, powerful lesson. Well, thank you. I'm glad that you got something out of it, my friend. I really do. I really do. All right, guys, take care. God bless, and see ya.